This financial analysis is powered by alphastockai.com, your go-to source for cutting-edge stock insights. For a deeper dive into these companies and more exclusive analysis, visit alphastockai.com. The oil and gas industry is more than just drilling and pumping. It's a brutal battle of margins, cash flow, and strategic execution. Today, we're breaking down Occidental Petroleum and Diamondback Energy, two energy heavyweights that have been going head-to-head in profitability, production efficiency, and shareholder returns. So, who's making more money? Who's handling volatility better? And most importantly, who deserves your investment? Let's get into it. First up, cash flow, the lifeblood of any oil company. Occidental Petroleum pulled in $4.9 billion in free cash flow in 2024, an impressive number that fueled massive debt repayment and shareholder returns. But Diamondback Energy is playing a different game. Their focus on capital efficiency means they produce more barrels per dollar spent than anyone else in the industry. With a break-even cost now at just $37 per barrel, they've built an impressive cushion against oil price swings. Now let's talk profitability. Diamondback Energy has been rock solid with an average net profit margin of 34.5% over the past 8 quarters. Meanwhile, Occidental Petroleum has been on a roller coaster, hitting a high of 19.2%, but dropping into negative territory in the most recent quarter. That's a red flag. Even more concerning, Occidental Petroleum's operating profit margin just hit 0. For an oil giant, that's a problem. Gross profit margins tell a similar story. Occidental Petroleum's margins have swung wildly from 83.2% to just 32.4%. That's some serious volatility. Meanwhile, Diamondback Energy has kept a steady hand, maintaining an average gross margin of 61.1%. That kind of stability is gold in the oil business. But numbers alone don't tell the full story. Strategy matters. Occidental Petroleum has been laser-focused on debt reduction, smashing its $4.5 billion debt paydown goal 7 months ahead of schedule. That's a huge win for financial health, and it's giving them flexibility for future investments. Meanwhile, Diamondback Energy has been playing chess with its asset portfolio, swapping lower-tier drilling sites for higher-quality inventory and investing in new energy projects, including potential data center expansions powered by natural gas. So, what's the game plan for 2025? Occidental Petroleum is betting big on carbon capture technology, with its Stratos project leading the way. If successful, this could be a game changer, positioning them as a leader in the future of clean energy. But big bets come with big risks. Diamondback Energy, on the other hand, is playing it smart and steady, focusing on free cash flow and keeping production costs low. Now, let's get to the real question. Which stock should you bet on? If you're looking for stability and consistent profitability, Diamondback Energy is the clear winner. They've mastered efficiency, controlled costs, and built a financial model that works even when oil prices dip. If you're in for the long-term growth potential, Occidental Petroleum offers a higher-risk, higher-reward play. They've got an aggressive debt reduction strategy and a bold vision for carbon capture, but their recent profitability struggles make it a less certain bet in the short term. So, who do you think is positioned better for 2025 and beyond? Let us know in the comments. And for more exclusive financial insights, check out alphastockai.com. Don't forget to like, subscribe, and hit the bell so you never miss a deep dive analysis. See you in the next one.